All right, let's take a look at building an SPX 0 DTE butterfly. And you may want to build a 0 DTE butterfly because they require a little bit less capital and less actual risk on the line than maybe an iron condor. So butterflies are a great way to do it. And, they've become popular recently. And people say, hey, you know what? Why haven't I discovered this? And the fact is they've been around for many years and for probably since 1975 or 76. Options were officially traded in 1973, and then the put side, I think, a few years later. But beyond that scope, you could always do a 0 DTE trade even back then, except you had to do monthlies because weeklies were not invented at that time. So you had to do things a little bit differently. Anyway, point being is the trade has gotten more popular just with the internet and just sometimes the fad of things happening. So I'm going to show you how to do this 0 DTE butterfly and how it approaches. And if you want to learn more about butterflies, I highly encourage you to check out our website, tradersfly.com. There's a lot of knowledge and information there. And there's even a course that's specific to butterflies. So if you really go down into the courses section, there's a course that's really all about butterflies. And that course is very in-depth. So if you really want to get into butterflies, I think it's like, let's see, 24 hours of training where we even do trade examples and go backwards step by step on some of those trades. So let's look at how we might construct a butterfly and why might we construct this butterfly. So what we've got is we've got the SPX right now moving around, and let's go to like a 15-minute chart. So here the market went down and then we're going sideways and now we're trying to pop a little bit. So what you're doing with a butterfly is you're trying to play touch, a game of touching. And what you're aiming to do is go to a place where this could touch. So right now the market is at 44.62. When you watch this video, it's going to be a completely different market because 0 days move quickly, and I might release this video like in a week or so. So when we look at this, it's up 12 points, but the concept and principles are the same. So we've got this expected to also move about 12 points remaining. So when we look at the 0 day, this is expected to move 12 points. If you don't have the Thinkorswim panel or platform, just use the ask for the at the money spread. So here's the at the money. We'll go ahead and buy this and this, and we got about a $12 expected move. So what you can do is you can take this 44.62, add 12, and that'll give you about 44.74. So let's say 44.75 because we probably don't have a strike. And there's the 44.75 if you think it's going up. Now, if you think it's going down, just do the other side and do minus 12. So we're going to go on the upside because most people understand the call side, so I think it's easier. And we'll do a butterfly right there, okay? So we'll build a butterfly, buy a butterfly, and we'll do one kind of out of the money, and we'll look for it to kind of pop. So all we're looking for is we're looking for it to kind of move slightly in this direction and just kind of get in there and then take it off. It probably won't get into this to expiring. I don't think that you're going to get into that level, because butterflies are very misleading on these analyze tabs. But what you're really trying to do is get it to kind of move in that direction and then take it off for some form of profitability. It's kind of like taking a cheap shot. Because take a look, we're risking about $60, $65 here. And if it gets into there, and we don't have a full decay here because we can't do hourly on the Thinkorswim platform. But let's say maybe you can get about $60. So you're risking 60 to maybe make $60 because you will have some of that decay going in there. So that's all what you're trying to do. And if it goes against you, well, it could just expire fully and that is it. So you have to be comfortable with the full max loss on these positions because otherwise, you're going to try to manage it, work it. It's 0 days. You don't have a lot of wiggle room and movement with this that you can deal with. You have to kind of allow that trade to work. Try to get it to touch, and sometimes they might touch the last 5 minutes, and then you're getting out. Now, the other thing with this is you could do 0 day butterflies that are, let's bring it a little bit closer. Let's say we do one at the money. Let me just do one right here. We'll do one a little more at the money. And you might say, well, why don't you do one at the money? Now, the problem with the at the money butterfly is it's got to stay in this confined range. Yes, you do have that decay, and that's okay too. Could you do these? Yes, absolutely. But now we've got to stay in this range and I'm paying up for it. So whereas one butterfly might be $55 out of the money, this one's $80. Not quite double the price, but it is a bit more. And if it starts going against me, I have to take a bit of a loss. So the objective in some cases with certain butterflies is pay less, let it wiggle, wiggle, and try and touch, and then get out. With these other butterflies, the ones at the money, you could do them. The problem is if they're starting to move against you, then you may need to get out. So there's a different procedure here in these cases because they just operate completely different. For a lot of people doing an at the money butterfly like this, something that's kind of right where the current price is, you can do them. But once they start moving against you, you got to be a little more cautious or willing to deal with the heat because sometimes they come right back, especially the shorter duration ones. And for a lot of people, they get nervous once they get to outside that range. So this is why if you set up and use less capital on a cheaper butterfly, then you're just looking for it to touch. If not, you lost 50, 60 bucks. You could also go to maybe a couple of day butterfly, like a 3-day, and just risk maybe something like 20, 30 bucks. And then you might move this up a little bit more as well, the butterfly, just because now you've got a little bit more wiggle room. So now you've got a different butterfly where now the theta is not as bad or nasty like a 0-day, and you've got a little more room. And then within like 1 or 2 days, if it pops, you're risking really about 85 to maybe make 60 bucks. I mean, right now it says 45, but that'll, continue to decay with time. So you're trying to get it into this zone, trying to hit kind of that target, which is the strike where you sell it at. So that's in a nutshell, setting up a SPX butterfly and how that would work. You could also do like 3 contracts to start, and it goes the same with these butterflies that are either at the money or 0 days. You could do 3 contracts to start, and if it kind of stays there and hangs out, and then you start getting profitable, take 1 contract off, then take another with time. So anyways, that's the basic approach to these 0-day butterfly spreads on the SPX. Which one do I prefer? I prefer to go a little out of the money. It's a little more cost effective. So I might take that $12 move, or even you could say, hey, you know what, $10 move, or you could do it on the downside. And you add to that 44.62, so we'd go 44.72, so that would be 44.75 in this case. Go out of the money, get yourself a butterfly, and you could take a cheap shot, in this case like a $50 shot, and if it does move 10 points, you go ahead, collect it, and it's kind of more like mailbox money. Can you ramp up the contracts? Sure you could, but you got to be careful with 0-day because these could expire fully, and then you're taking a full $1,000 loss. Although if it does happen and kind of moves in your favor, you could make that $400, $500, $600 pretty quickly as well. But you do have quite a bit of commissions with the butterflies. It's a bit more excessive maybe than letting those trades go to expiration. With an iron condor, if you let them go to expiration, you don't have to pay all of those commissions if you're doing SPX iron condors. Anyways, hope that helps. Truly appreciate you sticking with me, joining me, and feel free to check out tradingwebinars.co. That's where I have a lot of freebies and goodies for mini courses and just some things to continue to learn and educate, and a lot of them is free. So thanks for joining me, and I will see you in the next video. Take care.